You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central, 1 p.m. Eastern. Do you know what's going on in your portfolio and indeed in the options markets? Let's find out together. My name is Mark Longo from theoptionsinsider.com, as well as this fine network upon which you're listening to this program. I assume you're listening to the full network. If you haven't upgraded to the full network, if you just subscribed to the Option Block, you're missing out. Get on over there wherever you're listening to this. Subscribe to the full network. Get all of the good stuff. This show's hitting you pretty much every day these days. So if you want some quality options content to fill a little time, maybe educate, maybe inform, maybe, who knows, slightly even entertain you, who knows. Check out the full network. And if you like what you're hearing, make sure you keep those reviews coming so new folks can continue to discover the program. We've been seeing how many new folks have been doing just that over the past couple of months. We are pleased to see all the newcomers. We love you all. Glad you guys can make some use of this content in these somewhat dire times. Keep it coming. Also, keep those questions coming. We do love to hear from you guys, and you guys have been doing an able job of just that, keeping us on our toes with those questions. Try to get some of those today. And joining me to help answer those questions and a lot more, first off, let's go out to the sleepy, the quiet, the tranquil hamlet known as St. Charles, where we are joined once again by the uncleest of Mikes, and he must have a nice smile on his face because it's an Uncle Mike week. Yes, Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the show on this most Uncle Mike of weeks, sir.
Gotta love it. I was bummed out on Monday because we couldn't do the show, and just out of habit, when I came back to my office on Tuesday, I was all geared up to get your phone call around noon, and I forgot it was Tuesday, and I was just very disappointed. But all is right with the world now. We got the Option Block. Let's roll.
I could just picture you there in your office, your headset on, and a single tear just rolling down your cheek. I was sad, too. You know, we like doing the show. You can't blame us, listeners. It's these federal holidays. We are powerless against such things. But it's good to take a little break every now and then. Absence makes the heart go fonder, as they like to say. And also joining us, let's see if absence has made you guys fonder of him. He is the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the program. Were you also sitting there with the headset on Tuesday and a single tear coming down your face, sir?
No. I was like, oh, it's a Tuesday. There's no Option Block. I'm going to get on with my life.
You are cold and dead and heartless to the world, sir.
I am. I come to Option Block with a cold calculating mindset of world domination and trading prowess, not some emotional bag of jelly like the other Mark and Mike TOSAW.
That's why we turn to you, sir, for your deep, deep emotionless cynicism here. That's point counterpoint here on the program. And also joining us, probably holding down a nice seat comfortably in the middle there, he's the new and improved Andrew 2.0, a.k.a. Mr. Andrew Rocco, the Educational Content Strategy Manager. So that 5 times fast. Over there in TradeStation land, Mr. Andrew 2.0, welcome back to the Option Block, sir.
Mark, thanks for having me back. I was pretty upset on Monday. I shed a few tears myself, if that makes you feel any better.
It does. It makes me feel much better. You got this dead-hearted folks over here. Let's keep on rolling, though. See what the markets are feeling today. It is time for the Trading Block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, welcome to the Trading Block, the portion of the show where we break down what the heck is trading. And at least at the start, it's about every show, and not just about every show on the network these days for the past few months. I feel like I can just hit record and then hit play over and over again because it is yet another weird, crazy, somewhat unprecedented day and or week, depending on the show you're listening to and when we're recording that. But it is yet again this week here on the Option Block. Coming into Showtime, I was joking at the top of the show, but it really is an Uncle Mike type of week because we've seen pretty much naught but green for the entirety of the week with a few exceptions here or there. And when they were red, they stay red for very long. And so, just the optimism continues to unfold on the street. This rally is nigh on unstoppable at this point. Despite the fact that we're seeing interesting data yet again, we got the unemployment claims coming out. And again, this is kind of a glass half full, glass half empty, I suppose, depending on how you want to view it. We saw 2.1 million more Americans applying for unemployment benefits. That's, of course, down. So if you want to look at glass half full, it's down from 2.4 million claims the week before. It's also glass half empty, the 10th straight week with claims over 2 million. So again, kind of depends how you look at it. That doesn't take into account this new program for gig workers, which I guess totaled another additional 1.2 million out there. So that puts the total out there collecting benefits right now at a little over 21 million. That's down from nearly 25 million just last week. So I guess that's also perhaps a bit of a glass half full. Total, we've seen about 48 million people have applied. I hate to chuckle, but that's just a number that's so absurdly high that's kind of almost hard to fathom out there. 48 million people out there, even though they have fallen off pretty much every week since that initial spike to about 6.9 million back in the last week of March there. VIX not spiking. VIX kind of coming down the other side. Coming into Showtime, it was a little bit shy at 27 3/4. That puts it down almost 1.5 points, about 1 1/3 points from where it was this time last show. Our old friend, the VVIX, a.k.a. the vol of vol, at about 108 1/4. That puts it down over 15 handles, about 15 1/4 from where it was this time last show. So we're well off of that 120 level that it seems like VVIX has been stuck around for quite some time. And our old friend, the VXX, a.k.a. the product you guys love to fade, and someone did just that pretty sizably this week. We'll get to that on vol views tomorrow. Down to about a 33.6, down a little over a handle, about 1.3 handles from this time last show, which remember, listeners, was a week ago because we were off on Monday. Let's kick it off. Let's go back the opposite of the way we came. Let's start in TradeStation land. Mr. Andrew 2.0, what's going on? What's lighting up the tape over there in TradeStation land? And I'm curious for you, too, because a lot of people have been weighing in this week on the network about just what we're seeing out there, which is this endless sea of green on the street day after day. It's got a lot of people kind of scratching their chins. Are you scratching your chin as to this protracted rally as well, or do you think this is kind of what you expected?
Yeah, trading is just so easy. You just buy and you hold it. I'm kidding.
Yeah, exactly.
I mean, my current take on the market is constructive. Price and breadth just continue to be strong. They've been great indicators. So far, all the dips have been bought. Market continues to trade in a very technical fashion. With that being said, we have had a tremendous run. We're nearing a gap fill on the NASDAQ Composite, which has been the leader. Shockingly, the Russell has come up, filled all of the upside gaps in rapid fashion, really. S&P 500 has reached the milestone 3,000 mark. So I don't think it's a time to just pile in. But personally, as a trader, I need evidence to kind of become bearish. As far as TradeStation clients go, we're seeing SPY active, NVDA, GE, TQQ, Tesla, Amazon, mRNA, AMD, Hertz, Apple, and Boeing. So Boeing, I'll just go through a few of these. Boeing, we saw a really nice move in this one. They announced that they started their production again of the 737 MAX. So I'm sure all the people buying those calls last week had no idea this was coming. NVDA continues to be very strong. It's active both in common trading and options. The options market has been really seen a lot of flow come in, even post earnings on that one. And it's kind of shaken the tree and then rotated higher once again. Tesla's very coiled. GE had a fantastic move after that look below of multi-year lows. So those are some of the things I'm watching. Another thing will be next week we have I think it's this weekend is the ASCO conference. So ASCO, that's the oncology conference. That could move some biotech names as well.
Thank you for that, Mr. Andrew 2.0. Let's go back now to the deeply cynical, the black-hearted one himself, the Meatball. Mr. Meatball, an interesting conversation earlier this week on our Advisors Options show. And I think the quote of the week came from our buddy Mr. Matt over there at ORATS, where he said, "I haven't met anyone who's bullish, yet this market keeps rallying." I thought that one was kind of a bit of a prescient quote. I'm curious, A, what are your crazies in the pit chat, and which I have named it. That's just what it's called by now. The pit chat over there, what are they trading? And then B, what are your thoughts on this kind of endless sea of green we're all seeing these days?
I mean, it's been a Robinhood rally. It's been an algo rally. And, what's been interesting this week is the outperformance of the Dow and industrials relative to the NASDAQ 100. The NASDAQ 100 has been relatively soft all week, and the XLI, which is the industrial, I call it the real Main Street Index is the XLI. That thing has been off to the races, has catapulted higher on the week. On days where we've seen the S&P up marginally, that thing's been up 3-4%. It has really, what we're seeing is, in terms of market breadth, we're finally seeing some positive market breadth. We're not just being led by the Fab Five. We're being led by, old line industrial, where banks are positive. Railroads have broken out. Defense spending, a lot of that. Now, I'm a little surprised that we've not reacted to some of the Hong Kong, India, China stuff, some of the international macro stuff, but I think the opening of the U.S. economy is creating a big, closed, shutdown economy, rotation out, and economy open, rotation in. And that's been the big trade and what we're discussing in Pit Chat.
It will forever be known as Pit Chat. Just make your peace with it. It's a good, kind of succinct title. It gets to exactly what you're there for. You're there to chat with fellow Option Pit members. So there you go. The Pit Chat, as it has been christened. But you're right, we haven't even touched on the other macro issues that are floating around out there. Things getting a little tense in Hong Kong, of course, on the other side of China there with the India-China border. There have been some disputes of late as well, so a lot of things in the ether. And yet the market says nay to all of that. It says stimulus and cure for the virus, and we're off to the races out there. Mr. Uncle Mike, I saved you for last because you are our resident bull. When Mr. Matt from ORAT said that, I thought to myself, I know one guy who's bullish, and that is indeed Mr. Uncle Mike. So walk us through, sir, why you're so overjoyed to see so much green on the screen, and what else is lighting up your tape out there in this most Uncle Mike of weeks, sir?
Oh, I'm busting at the seams. So I think this is kind of like the way that a lot of people describe the 2016 election and how Trump won and didn't do well in the polls beforehand is that a lot of the people that voted for Trump didn't want to admit that they were voting for Trump. And so in some ways, maybe that's this market in that a lot of people who are buying stocks or buying funds or whatever don't want to admit that they're buying funds. So that's kind of where I'm seeing this. This is that type of a market, I would say. But in terms of where I am, I actually put on a trade yesterday. And for my aggressive strategy, I've been in cash pretty much since the market went negative. That's my rule. But I do allow for a 5% allocation during the market being down. And so the market is still down on the year. The S&P is still down. However, I just couldn't stand it anymore. I am taking, by gosh, my 5% allocation. I'm still 95% in cash for my aggressive strategy. And I actually went out and bought a call spread yesterday. I mean, I can't go into the specifics of it. My compliance people don't like that sort of thing. But I actually took on a small half-position call spread just because I wanted to be a part of this. And with the S&P actually closing above 3,000, with us actually being above the 200-day moving average, I felt comfortable taking on a small position. Now, I still am very adamant about my rule that if the market's negative on the year, I want to be at least 95% in cash, just because of the fact that if a market can't even be positive on the year, then that tells me it's still not a strong market or not strong enough to where I want to be trading aggressively in it, being the aggressive bull with which I am. However, those are actually two pretty bullish signs, in my opinion, that aren't necessarily obscure, weird technical things. The 200-day moving average is something that's discussed pretty much in the mainstream within the trading world. And the 3,000 mark is very much a key number from the standpoint it's one of those milestone numbers of which we have. So I did actually get into something, which I'm very excited about. The other things with which we've been doing at RCM within our managed portfolios recently is that for our covered call portfolios, I would say all but maybe one or two stocks, we're actually using call spreads against the stocks that we own, just because of the fact that, yes, we are sacrificing some income, meaning we're not getting the full income benefit of just a good old-fashioned covered call, but in markets like this, when the market just seems to go way up or way down for no reason, we wanted to make sure that we are able to at least go for the income. But in case we're wrong and the market goes much higher, we kind of wanted to have our cake and eat it too, and that we wanted to be in an income strategy. But if for some odd reason the market goes up to the heavens, which it kind of has recently, or at least the new lower heavens, if you want to call it that, since we're not anywhere near the all-time highs, we're still able to be a part of it. So we've been doing that lately. And in terms of where a lot of the money is going with the sectors, I agree a lot with Mark. If you look at Netflix recently, Netflix is just one example of a stock that was higher. And then as we're getting more and more news about America opening again, Netflix is pulling back. And there is a lot of rotation going on with that. The banks or XLF, ETF with which I follow, has been going up fairly significantly. And technology, it's not been the FANGs quite leading the way as they have in the past. So a lot of fun things that are happening, at least for now. What I'm hoping, just not only as a bullish market participant, but also just as a member of society, is that we can get things more back to normal within America. Hopefully we can have some Major League Baseball, the players union and the owners can agree upon things. And please, everybody, pray really hard. We need football this fall. America needs football, so we really need to pray hard that we can have an NFL season this fall, as well as college and high school. So I'm optimistic and very hopeful that those things happen, and let's see where we go with it.
You want to see Uncle Mike join the black-hearted, cynical ranks of the meatball, then take away his football. Then that'd be a very different picture in a few months here on the program. Speaking of pictures, let's see what kind of picture we got overall market-wise right now. Let's start with the big indices. See what's lighting it up out there on this another green day, pretty firmly in the ground. I'm not sure I've even had a chance to break it down there. Come into right about a few minutes ago, we saw the S&P up almost a full %. We saw the NASDAQ up a little bit over 1%, and the Dow, the laggard, up about 0.2% on the day. VIX doing decent paper today at about just a couple contracts shy of 200K out there as of a few minutes ago. The ADV, about 358,000 contracts out there. The SPY at a little bit north of 2.5 million. The ADV about 4.75 million out there. The S doing 639,000 contracts. The ADV a little bit north of 1 million. We have a date for when the S will return in a physical form. That will be June 8th, so coming up in about a week and change. So that'll be interesting to see how exactly that impacts that number, because that ADV getting kind of anemic. 1 million and change for the S, that's pretty light. The Qs, 543,000. The ADV, about 815. That's looking pretty robust. And the IWM, as the Andrew 2.0 alluded to earlier, the small caps have been on fire. If you want more of that, we'll get into small caps in a little bit later today. On TWIFO IWM version, lighting it up, 333,000. The ADV is a pretty strong 698,000 contracts out there. Let's break out into the most active, the top 10s. We heard what people were trading on TradeStation land, see if that lines up with the rest of the market. Number 10 is actually a newcomer to the top 10. I don't believe we've seen this one in the top 10 before, at least on an options front, and this is DraftKings. It cost you, by the way, 180,000 contracts to break into the top 10 today, which is a sign that it's a pretty robust day. That's pretty strong. And it's DraftKings, number 10. I was just looking at DraftKings here right before the show, and interesting chart out here. This is the name, of course, that kind of virtual gambling, though maybe it won't be that virtual. Maybe it will be real gambling in some senses fairly soon. A year ago, they were trading 980. They got up to, looks like a weird blip on I'm not sure what this data is in April with it. Maybe there was a corporate action here. Maybe they had a split or reverse split. It says they're trading 28 cents on April 29th. I'm not sure how reliable that quote is. And then right back up to $20 there on the 1st. And it's been kind of looking north ever since. So a pretty active day out there for DraftKings. Number 9, a more reliable regular name in the top 10. This is Microsoft at 192,000 contracts. Number 8, Snap. Make another appearance in the top 10 at 217. Number 7, Tesla. Tesla all the way down to number 7. You know it's a weird day then when Tesla down to number 7. 226,000 contracts. Number 5, 6 and 5, our old friends, the ticker buddies. Bank of America, 238,000. And our friends across the street there, Boeing, at number 5 with 251,000. Number 4, AMD, 254,000. Number 3, Facebook, 313,000. Numero dos there, GE, 351. That means our old stalwart back in the number 1 spot, Apple, 426,000 contracts as of a few minutes ago. Let's look really quickly. Haven't checked on the most biased paper in a while. The most biased paper is actually in Snap. 84% of that flow coming on the call side of the ledger. Folks getting themselves some Snap calls. Let's see really quickly what Snap is up to right now. 18.19, up about $1.19 or 7%. So a good day here for Snap. An interesting week out there if you like to focus on the micro. There are still some earnings popping off, even though we are at the tail end of the season. We saw AutoZone on Tuesday, Wednesday, HP and Box, so still some names you've heard of. Thursday, Uncle Mike's favorite day of the earnings season because it's got Dollar General and Dollar Tree. Man, never met a dollar store he didn't like, as well as TD and Costco and Salesforce. And Friday's Big Lots. So today before the bell, we had Dollar Tree and Toronto Dominion. You guys can get those earnings move and earnings move results and earnings season reports over there, theoptionsinsider.com. Let's break down really quickly a couple of them. We had TD before the bell. They were at 41.57 as the time of this report going into their announcement, I should say, and they were pricing in 3.2%. They actually moved 6.5%, so a little bit of outperformance, pretty strong outperformance there, pretty much doubling it or close to it out there in TD land. Dollar Tree, let's see, 78.59 going into the report. Also, another strong one. They were pricing in 7.6%. They moved 25.9%. So blowing the doors off on that one. So perhaps maybe a little bit of interesting developments out here. If you think earnings season is done and behind you, some names holding out their hands saying, hey, don't forget about us. Costco after the bell. They were at 302.76 as of the time of this report. They were pricing in $8.17. Again, the earnings reports, move reports show you the actual net dollar amounts of the straddles, and the results reports, they show you the percentage moves. A little bit different there. 8.17 on the earnings on the straddle for what's projected right now. And in the past, they moved $9.27, so a little light on the Costco front, which is kind of interesting and kind of been the tail of the tape for most of the season. If you want to see the season for yourself, the earnings season report is the place to go. We chatted about all this. If you want to see how these numbers break down, get a little bit of detail from the creator, check out the Advisors Option program, which is live on the network as we speak. We did that one yesterday with Matt and his crew over there. They crunch all the numbers over there, and you guys get them for free. Can't complain about the price. TheOptionsInsider.com. Now it's time for us to get weird. It is time for us to get wild. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
right, everybody. It's time to get weird. Time for the odd block. This is usually the portion of the show where I unleash our Eye of Sauron upon the markets. And he is out there scanning and watching, always watching, if I do want to pull him back in and see what he's found for us. But before we do that, I'd like to check in and see what the old TradeStation hot seat, the hot seat, what he's sitting in, the hot list is what he's using to find this stuff, what the old hot list at TradeStation land, what it's finding, maybe do a little bit of compare and contrast, which I think is always fun. So, Mr. Andrew 2.0, sir, you have been invoked. What is the first name on your hit list for today, sir?
Yeah, so one thing that has been catching my eye is the chip names in general. Yesterday, we saw Micron MU raise guidance. Even after they raised guidance, they've been tattooing that thing with calls. It's trying to go monthly inside and up. So the key level to watch on that one would be a close over 50.14. LRCX, another one, coiled chart, seen some flow come in as well. The main one I'm watching, and this is one I did a few weeks ago, is NVIDIA. NVIDIA saw 2,000 of next week's 340s come through. It's a bit more stretched than the others, but it had a nice retest of the 21 SMA this morning. It rotated up. What's been notable to me in these chip stocks in general is really the price action versus news. So the chip stocks should be selling off with all the rhetoric with China, but they really have not. So instead, they're showing a ton of relative strength. I'm seeing a lot of flow. So for me personally, I will always go with price action. I'll always trust price action versus headlines.
NVIDIA 340s. That's an interesting strike selection because we're at about a 348 right now. We've blown through that 340 strike to the tune of up another 760 today, or about 2.2, almost 2.25% actually. Today. So a good day out there in NVIDIA land, outperforming just about everything up there to the upside. A year ago, NVIDIA was trading, this seems silly by comparison with today's levels, but 143.33. So it has moved quite a bit since then. And that's all pretty much, a lot of that is in the post-crypto blush that it saw a lot of this rally pop off here. It peaked out right before all the madness hit at 314. And then it sold off down again to about sub 200, 196 or so. It looks like that was about around the bottom there. And as obviously this V-shaped recovery has been extra V-shaped in NVIDIA land because it's pretty much back off to the races. It got up as high recently as 361 and has given some of that back here. So interesting. Got down to about 341. Maybe that's when these calls went up. Looking at it today out there, seeing the big prints in NVIDIA land. Looks like it's calls again. It's calls expiring on the 5th of June. So out there in the weeklies, the 360s going up about 1,000 times for $5. Paper, buy in those. Maybe your friend out there, Andrew, I should say, who was loaded up on 340s, maybe he's rolling to the 360s now. Also seeing 360s going up in May, 731 times. Not on a spread, even though it may make you think someone's playing a little bit of the roll game out there. So Mr. Meatball, I'm curious, is this a name that's come up in your quote-unquote pit chat? And what are your thoughts on some fairly near-dated June monthlies and now in the weeklies upside calls here in NVIDIA, sir? Yeah,
NVIDIA has been incredible. It's been off to the races. It has run so much. It is now, I believe, the 7th biggest company in the NASDAQ 100. It's worth almost about 2% of the index. So this is not the NVIDIA of even, 6 months ago. NVIDIA is almost as big as Intel now. So think about that as you trade this. This is now a mega cap. And so, if you look at Micron's earnings yesterday and all the things they were saying, and then you hear what was going on in the Micron volume, then this makes a lot of sense. And it could be someone dumping the stock and buying calls to make sure they catch upside. But who knows? This thing could just be a smart paper saying this thing's going higher.
Yeah, it has been fascinating to watch how this name has evolved from a few years back. I remember, and all of a sudden everyone awakened to the fact really that, hey, people need these chips in mobile. And all of a sudden that caused kind of the first real big explosion in NVIDIA. Then the crypto wave came. NVIDIA obviously still makes a lot of those very high-end graphics cards out there. So that was driving a lot of the crypto mining scene for a while. And people saw the NVDA stock itself as a bit of a canary in the coal mine for how crypto was going to do. So a lot of things have unfolded. Now we're kind of in this next iteration of NVIDIA where, as you rightly point out, Mark, it's kind of almost like a mega. It's funny to even say those names in the same sentence, NVIDIA and Intel, yet that's where we find ourselves these days, which is kind of interesting. Good one to kick us off there, Mr. Andrew 2.0. What else you got on your hit list from the hot list over there at TradeStation today, sir?
Yes. So one that I saw come through is Smile Direct Club. This is more of a speculative name, ticker symbol SDC. Saw 361 of the July 17th 9 calls come through. Smile Direct, just in case your listeners don't know, they provide clear braces for 60% less than ordinary braces, and they typically straighten the teeth in a shorter period of time. So to me, it seems like they have a better mousetrap. I mean, I don't know too many of the details. It's also a telehealth play, which makes it attractive, especially with the COVID-19 fears. I don't know if that's going to go away anytime soon. It's had a rough time since the IPO, but now it seems to have shaken out both longs and shorts. So weekly basis just went inside, week and up. It's also trying to rotate on a monthly basis. The key spot that I'm watching and that bulls want to see overtaken is that 8 level.
That does seem to be the focus out there. We'll get to what our Eye of Sauron has found in a second. But Smile Direct Club, ticker symbol SDC. I like these kind of newcomers to our odd block here. So we can always parse, the AMDs and the Teslas of the world all the time, but it's fun to have some interesting ones. I think we have touched on this one in the past, but it has been some time. Ticker symbol, of course, SDC. Trading today, $7.90, up about 6 cents, or for this name, 0.75%. A year ago, this thing was trading a wee bit north of where it is right now. It was trading over 2x, 16.67 a year ago. Peaked at about a little over 19, about 19.5. And then it sold off pretty hard, got down to about $8 and change in November, and then kind of hung out there for a while and started rallying again. Got all the way up to, about 15 and a third, right in the middle of February. And then we all know what happened. Sold off pretty hard, down to 410. Looks like it got as low intraday as 364. So, yeah, that was a pretty rough period, which is interesting because you'd think maybe home dental things would be in demand at that time. And it seemed like the market finally awakened to that fact because it started popping up again. It got up to about $9.19 back in the middle of May, and then it kind of sold off again down to $6.86. So those things had been a surprisingly turbulent run for the past couple of months. Right now, he said right about $7.90. Mr. Andrew 2.0 profiling some near-term upside. Looks like you mentioned the 8 strike, Andrew, and it seems like that's in fashion. That's the de rigueur strike today. Looks like about a 500 lot was the big print out there of the May 8s going on. These are the expiring on the 29th, so these are in the weeklies. So going out tomorrow, someone dumping 500 of those. You might think like it's an overripe, but with a day to go, that's probably closing. Someone getting the heck out of Dodge, getting 15 cents for those. So probably deciding maybe the 8 strike, a bit of a bridge too far by tomorrow, getting the heck out of Dodge and getting his almost 15 and a half cents while he still could. Kind of hard to argue with that one. Mr. Meatball, what are your thoughts on some near-term upside? And it sounds like someone getting out of some near-term upside. And again, one of our old stalwarts, the notion of trading all these upside calls on a stock that at the end of the day is $7.86, sir. What are your thoughts on all that?
I mean, I guess it makes sense to close them. We've had a rally, and I don't see an issue with this. It makes sense. When you have an option that's open, if you can, you close it. That's a life lesson from yours truly, the Greasy Meatball.
You're full of the lessons today, sir. Mr. Andrew 2.0, hit us with your third and final name from the hot list, sir.
Yeah, so my third and final name would be SLV. That's the ETF, of course, that tracks silver. What I'm watching here is that it had this massive move up off the lows. It's retook that 200 SMA and formed this tight little daily bull flag. So that's something that I look for. This is really a textbook bull flag. And what I saw come through is 7,000 of the August 17 calls come through. Again, that's 7,000 of the August 20th 17 calls come through. And they're probably gunning. There's an open gap up here around 1722. So bulls will be gunning for that level.
Uh-oh. SLV. You know, when I hear SLV, you know who's going to get invoked. It's, of course, the uncleist of Mike's who's still sitting on a 2-year SLV collar. Maybe that's him getting out of some of the upside leg of that collar. But the 17s, you said out there, interesting strike selection. As of right now, SLV sitting at about 16, 17, up about 2 cents. Not exactly a huge day for SLV. Silver's been an interesting one to watch. A year ago, it was trading about 13.5. Got up to about 17.5 right before all this madness happened. Then it sold off down to 11.21. Looks like it got it down as low intraday as about 10.86. And then it's been about pretty V-shaped ever since, getting up to about 16 and a third, selling off a little bit, and now hovering at about 16.17. Looks like today, the trade du jour is calls as well. It's the SEP 16 halves. These went up for $1.23, 11,750 times. So paper opening on some upside. Mr. Uncle Mike, sir, you're my go-to for all things SLV. First off, give us any updates if you have them on your 2-year protracted collar saga. And then B, what are your thoughts on people piling into near-term upside, both the trade Andrew profiled out there, the 17s, as well as today, nearly 12,000 of the 16 halves in September, sir?
Well, I can tell you personally, Mark, that at Option Pit, this was one that hit our Sharp Bets radar 3 weeks ago. We got long the 14-24 call spread in Sharp Bets. That has paid off really well. This one, everybody who watches metals, who watches, the metal space, the industrial space, is all over silver in both the futures and in SLV. A couple of the futures guys I've talked to have loved it. They love the calls. I did write up last week a call for thestreet.com on the June 3rd, 16 and 16 calls, I believe. So this is one that we have been all over because we see silver as a twofold play. One, it's a play on a recovering industrial. And two, because of its semi-precious status, it being a metal, it is very good as an inflationary thing to own, right? I actually like it from an inflationary standpoint better than maybe I like gold itself. And I think it could win on both ends. I think as the economy takes off, you're going to see more demand for silver, and you could see some actual inflation in silver. Personally, Andrew, I think you mentioned the gap. I think SLV is going over 18. I think you're going to see silver get to 18, 19, $20 an ounce before all is said and done. And then who knows from there?
So with silver, what's interesting about silver is that you can still get a good long-term result from holding it as you would stocks, but it just acts in a different way. It will bore you to death by going in a channel for a while. It will then go down, but then all of a sudden, like a thief in the night, silver will just go up to the high heavens. I'm using the high heavens a lot today, I'm noticing. Will go up to very high levels out of nowhere. Back in 2011, 2012, I believe it was, silver just all of a sudden went up to over the 50 level just for various reasons for it. But it went up there very quickly and very unexplained in a lot of ways. And I really think the thing that really stopped it from going further was that the Merc had raised their maintenance requirements on the futures contract right when it came there, which rightfully so, because the value of it became so big. But I think that was kind of not necessarily the catalyst that made it go down, but around that time is when it started to go down, and it's been in the teens for quite a while now. But with everything that's happening at this stage, this could be a time for silver to make another run for it.
This could be a time to check your mail. Oh, wait, it is, because it is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. You guys know the drill. You send in questions We answer them. Sometimes we ask you guys questions as well. We asked you guys towards the end of last week. What were you feeling about VIX? It had just broken through 30 to the downside at that point. Still not that far from that level, a couple of handles away from there, which again showing maybe some ancillary concerns about these valuation levels in these markets. It would be hard to blame people at that front. But we asked you, what are you feeling at this point? Do you think this vol is going to trend higher, or is this kind of the beginning of a trend back down to more reasonable, sane, dare I say, normal levels of volatility? Give you 4 choices. Will it be a month from now higher, north of 35, lower, south of 25, around this level in the 25 to 35 range, or you don't care, you're sitting in cash, and higher, north of 35, winning yet again? So our audience continuing to fade this rally up to about 46%, a lower, not even a full majority, not even a half yet this time. So maybe that's a sign that some of the bears are perhaps getting broken. They just can't take this anymore. 45, almost 46% saying higher vol going forward. North of 35. About 27% saying around here in that 25 to 35 range. About 19% saying lower, south of 25, so getting back closer to a normal level of volatility. And about 8.5% saying you don't care because you're in cash. All right, moving on here to what you guys have on the brain. I got to get these in from Chinook. I love he's got a twofer that just brought a smile to my face. I love our artistic listeners. You send in cool graphical ones, you can probably squeeze in a twofer yourself, listener. Usually we're limited to one, but we're being nice here because Chinook outdid himself. First off, he sent in, we talked on our last show, which was a while ago now. I mentioned, we have all these crazy plagues, all these other things going on. All we're missing is a plague of locusts out there. And we joked about whether the murder hornets were that. And he chimed in and said, you wanted a biblical plague of locusts. Will Africa fit the bill? He says it has been an issue for weeks now. He sent us a link to an article that says gigantic new locust swarms hit East Africa. So I guess when I said we were dodging, we didn't have all of the biblical plagues yet, I misspoke. There is indeed a plague of locusts hitting Africa as we speak. And, of course, a soon-to-be plague, perhaps, of murder hornets here in the U.S. So perhaps I got ahead of myself on that one. Well played, Mr. Chinook. But you outdid yourself with this one. You followed up. You had a question, I believe, we were talking about, expiration and contract settlements and all these things. And as always, I tell people, check out their contract specs over there at OCC, a.k.a. the Options Clearing Corp. He wrote back and said he checked that. He said, too often the default is to ask the experts, and I remember at Options Clearing. I learned that by listening to you, and he put a GIF there I learned it by watching you, which is, of course, that old anti-drug commercial from the 80s. I learned it by watching you, Dad. I love that. So that one brought a smile to my face because I haven't seen that PSA in quite some time. Probably an infamous classic out there. So just for bringing that smile to my face, Mr. Chinook, you get a twofer here on the show. Well done. Finding the locusts and digging up that old PSA, sir. Well done. All right, Mr. Andrew 2.0, same question for you, sir. What are you talking to the folks over there in TradeStation land? What are they hitting you up about right now? What are their questions right now, sir?
So one client asked, when finding a strategy, what are some of the key things I should look for? So what I would say is the most important thing to do when looking for a trading strategy is to look for an uncomplicated trading strategy. One of my favorite quotes from Da Vinci is, simplicity is the ultimate sophistication. And I really think that rings true for trading. I think that inexperienced traders, they tend to want to add way too many indicators to start when really they should be focusing on removing indicators and really simplifying that picture. The best indicator I have found is definitely price. So everything I personally do is based off technicals. It doesn't work every single time, but with proper risk management in place, I've been able to make it work. So always keep in mind there's not really a crystal ball. The crystal ball is following the trend, having your strategy in place, adhering to that strategy, and most importantly, when you're right, you want to take advantage of it, and when you're wrong, you want to limit your downside. I think that kind of holds true for any strategy.
I like having a somewhat technical guy on the show because I'm not the biggest technician. I will admit that out there right now. Mr. Meatball is not as well. So Uncle Mike's been labeled the default technician on the show here because he looks at a chart every now and then. But it's not really our bag for a variety of reasons we've laid out many times here on the show. But Andrew 2.0 likes them. Maybe you guys have your favorite indicator that you use Maybe that might be a good poll question. What do you guys use? Or just send it in to us if you have a particular technical indicator that you find resonates fairly well with your options trading. Send it in. If you don't want us to share it with the masses, that's fine. Just let us know. We'll keep it hush-hush, but we'll talk about it amongst ourselves for interesting nuggets. Speaking of interesting nuggets here, we got Damien writing in, bad guy from The Omen, I believe, chiming in. He says, hey, Mark / Greasy Meatball / Rock Lobster. Uh-oh, Uncle Mike, you're off the list. Andrew 2.0, nowhere to be seen there. He goes on to write, I have a question about using options on leveraged ETFs such as TQQQ. Does the volatility decay of the ETF combine with theta in such a way that the puts will tend to be even more expensive than the calls? Would then a put on TQQQ be more expensive than a call on SQQQ? Can the volatility decay in TQQQ be used to enhance the hedge potential of a long put? Thanks for the show. I listen every day. Well, thanks for listening. Glad you tune in every day. We have enough content hitting you to keep you filled every day, certainly. Not this show. This show's only twice a week, but there are shows hitting the network literally every day these days. So if you haven't upgraded to the full network listeners, make sure you do so. Sounds like Damien here has. If you're not familiar with TQQQ listeners, this is one of those levered 3X Franken products. This case, it's 3X. The NASDAQ out there. I did a little digging on this question, came in right before the show, just to see, what's going on out there in TQQQ. And it actually does a fairly decent amount of options paper out there, sometimes analyzing the skew and what's going on, bids to the puts, bids to the calls, and these Franken products is a meaningless thing because the flow is so light, it doesn't really matter. Any sort of theoretical valuation differences will be overwhelmed by the liquidity lack therein. But this one does about 98,000 contracts a day. If you're curious, maybe you think the puts have some sort of more attraction than the calls do. Actually, right now, the puts are being outpaced by the calls in terms of OI. The OI has about 311,000 calls and about 274,000 puts. Or if you want to compare and contrast, that's about a 0.88 on the old put to call net put to call ratio, not put to call versus total open interest. That's a little bit different thing. That's pretty much in line with what the moving average is out there as well. Actually, it's a little bit higher. It's about 0.85. So we don't see any market bias, at least in the near term here, to the puts out in TQQQ. But it does raise an interesting point, Mr. Meatball, because obviously these are levered products, so they're achieving that leverage through the use of some sort of derivative instruments. We can all probably guess what they're doing out there, but we don't really know for sure. And that's usually going to involve some sort of long premium thing, which is going to have its own theta decay component. It's going to be exacerbated by how frequently they rebalance. I'm not sure how frequently they do here, but I'm guessing it's probably daily. So a lot of things to unpack. He raises an interesting theoretical point, Mr. Meatball. Since you're invoked in this question, I'll give you a chance to swing at it first. What are your thoughts on the decay in the options used to get that 3x return in TQQQ? Easy for me to say. TQQQ, making the puts perhaps more attractive than they otherwise would be.
Well, this all gets priced in. The borrow rate that gets put into these different names does in fact take a lot of that into account. But I will say that these broken indexes do, in fact, have some real craziness to them. And yeah, puts can pay off. I do find that leaps tend to have some positive expectancy in them because they're broken. But for example, here's a kind of a classic example in terms of the levered ETF type of space. We did a big study back in the day, and you could short VXX and XIV. Keeping an asset balance, keeping the two delta neutral, and it had a positive return. And that is all because of daily rebalancing. So yes, there is in fact some sort of edge in there, but it's the edge that you can truly capture other than just kind of being short on it. You kind of need professional market making type of leverage and professional execution.
Yeah, the account levels in the retail accounts, it makes it challenging to capture these somewhat minute discrepancies out here. But it is an interesting theoretical question. That's why we like you guys kind of sending in these kind of left field curveballs. Worth noting as well, of course, that the margin requirements on a lot of these options on these levered ETPs, particularly for retail, have been dramatically increased in recent years. So the old days even in the early days of this show when we first launched it, you could go out there and take flyers on options on these levered ETPs, and a lot of the brokers hadn't really put two and two together that they were giving you leverage on a leverage product, so you could take really inexpensive swings at the bat in a lot of these products. That is no longer the case, so that's something else you have to factor in as well, as the Meatball kind of alluded to, is that the margin requirements to take advantage of whatever minute potential you might see in this are going to be pretty onerous. And so, unfortunately, this perhaps not quite as attractive of a notion as it maybe was 5+ years ago when the margin was a little bit more favorable. But theoretically, certainly intriguing. So we like you guys bringing these ones up here on the show. Let's see. Let's end with a little bit of love. This comes from the creatively named SH32. He says, just thought I'd let you know. Been listening to your podcast for a couple of years now. Was totally lost at first, but the quality was so awesome, and I understood a few things, so I kept listening, understanding and enjoying a lot more now. Keep it up, and thanks. Well, you're welcome, Mr. SH32, and everyone else out there who's been sending in similar comments as we're all trapped at home these days. We appreciate you guys getting some value of the show. Yeah, we want you guys to kind of learn along with the show. If you find yourself tuning in, and a lot of newcomers are tuning, maybe this conversation we just had about the decay and the comparing and contrasting of the skews and something like TQQQ, that could be a little bit over your head. That's fine. That's okay. You go back and dig in. Maybe you look at that ticker, see what the heck it is, and maybe you start digging into some of our earlier shows as well, or of course some of our educational shows on the network as well, like OPR, and indeed, of course, the old Options Boot Camp, which is back every week. You guys have been mainlining it. Glad to see that. So if you find yourself a little bit overwhelmed, that's not exactly a bad thing. Over time, you'll get more acclimated to it, just like SH32 did here, which is kind of the point of the show. We don't want to talk down to you guys. We want to make sure you guys kind of raise up to the level of the show. And if you have questions, send them in. We do love to hear from you. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show where we tell you what we're watching for the rest of this week until we can all gather here together on Monday. And thankfully, we are gathering here together on Monday. No hiatus, even though it was nice to take a little bit of a break out there. I'm not going to lie. We've been cranking out content like madmen over here, so nice to have a little bit of a hiatus. But that said, let's start once again in the land of the TradeStation hot seat. Mr. Andrew 2.0, sir, what are you watching for the rest of this week and until the weekend and until we can gather here together again on Monday, sir?
Sure. So what I've seen is the current market has been trending higher, like everyone has said. So again, I want to see evidence to change my thinking. Otherwise, you just want to follow the trend, basically. All the dips are being bought. Any open gaps are getting filled. The market's reversing and just kind of riding the 21 SMA up. We have a gap fill on the NASDAQ composite, something to be aware of, potential spot. If we are to pull back, it would make sense here. I'm seeing a little bit of percent R divergence. It's something I watch on the SPX. But again, for all of these indicators, I need price to prove anything substantial as far as the bear side. So at some point, we will certainly pull back, especially after such a run. But it's absolutely critical right now to keep in mind your overall risk. I think if you haven't been in, it's not a time to pile in. If you are in right now, you want to be aware of what I call your portfolio heat, your overall risk, especially as an options trader. You always want to have that on mind, but especially now. On a macro level, what I'm looking at is the China-U.S. relations. We'll see if anything escalates as far as the Hong Kong situation, trade, the COVID-19 numbers, another thing. A lot of states are reopening. I know here in Miami, a lot of restaurants are now open. So if those numbers start to spike up again, that would be a concern for the market. So far, overall, the market has done a fantastic job of shaking off all of these headlines. And the key, as you mentioned, is don't overthink things.
Yeah, we find ourselves in a situation that is very much analogous now to where we were right before all this madness happened, people are looking at somewhat lofty valuation levels again and wondering if maybe they should hedge, maybe they should get out. So the conversation is very similar to what we had a few months ago here on the show. Everything old, or in this case, not that even that old, is new once again. Mr. Uncle Mike, same question for you, sir. What are you watching through the weekend until we can gather here together on Monday, sir?
Well, a couple things. Watching the SPX numbers, seeing if we can hold the 3,000 mark tomorrow as well as going into the weekend. Also watching, looking to see what happens in the social media world with Facebook and Twitter, in addition to everything that Andrew 2.0 would point out. But in the social media world, the fact that they're fact-checking President Trump right now, kind of curious to see where this goes. He typically isn't one that likes to be fact-checked, so to speak. And if this becomes some type of a giant war within the Trump administration as well as social media, just to kind of see where that goes as well. So watching those things, but primarily the main thing that I think we need to keep our eye on right now is the SPX at 3,000. Of course, any macro news as well.
And last but not least, the diehard cynic, the Greasy Meatball. Mr. Greasy Meatball, sir, what are you keeping an eye on until you and I at least can gather here together tomorrow on Volatility Views, 1 p.m. Central, 2 p.m. Eastern, sir?
I think it's going to be a Rock Lobster Volatility View tomorrow.
Well, that's it. I'm out. I'm done. You still recovering from that 400th episode spectacular, sir?
Yeah, no, I'm going to be. I'm going to. I've got some activities in the afternoon that are going to keep me tied up, unfortunately. But no, there's a lot on my plate. I think this Hong Kong stuff is really interesting. As Mike said, I think the social media stuff, I think Facebook, Twitter, Apple, Google, to a lesser extent, Amazon. Amazon. So here's Twitter's number one on this man's target. Then Amazon's a close second. I mean, could Amazon hold anything else that makes this man more angry? Probably not. So I think that, there's some bang risk. I want to continue to see a sector rotation. I still think at some point in the next few weeks, we're going to see a week where the NASDAQ is flattish, maybe even red a little bit, and market breadth is positive because we start seeing these industrials and banks really take off. I mean, the one area that's still really soft is banking. Take a look at the mega cap banks and the mid caps. Citigroup, Morgan Stanley, JP Morgan, Goldman, KRE, Fifth Third Bank, Comerica, Huntington Bank Corp. They're all kind of, if you're looking for an area where we could catch a bid, that's an area I'm watching. That is one. Wells Fargo is one of our kind of focus stocks in our quote unquote pit chat, otherwise known as the Trading Legion. And that's what I'm watching.
That's what the Trading Legion is. It's the pit chat. You redubbed it the Trading Legion. We
like that as a better name than pit chat. This way they can all be, they can I can be a Roman general, or I'm the option pit emperor. Andrew is can be my.
He can be your centurion. He leads the.
He can be one of the centurion leaders. Yes. And then we've got the Legion. Right?
Don't get me started on Roman military analogies. I can go for days.
Exactly.
But since we're talking the Legion, folks, if folks want to become a part of this Legion, maybe they want to be a Legionnaire of their own. Do they get to call themselves Legionnaires? How do I become part of this cool club?
They are not Legionnaires. That is something else. That is something you don't want. I write and put out content on Volatility VIX and trading every day. Go to optionpit.com and register for our newsletter, and we'll send you stuff all the time that will be valuable, both macro and micro, that you'll want to use.
I want to join, but only if I can call myself a Legionnaire. That just sounds cooler. Forget about the Legionnaire's disease. That's a modern incarnation. Let's go back to the old Roman incarnation, which is much cooler. Join the Legion for yourself. It just sounds cool. Not as cool as Pit Chat, maybe, but cool nonetheless. OptionPit.com is the place to go. Mr. Uncle Mike, sir, do you have any legions or chats or other things you want to offer for us? Or maybe, like I mentioned earlier, people have those questions again of, hey, we're kind of getting lofty again. Should I hedge? If they have such questions, where should they go? What should they do?
they can call me directly at 630-885-0017 or check out my website at stcharleswealth.com. Many opinions, many thoughts. Would love to talk to any of you. I've had a great relationship with all 10,000 of our listeners through the years, and would love to talk to more.
There you go. Give him a call. Give me number 10,001 to call Uncle Mike over there. Give him a call. Hit him up. stcharleswealth.com is the place to go. And last but certainly not least, Mr. Andrew 2.0. If folks want to check out the hot list or your insights blog or all the other cool tools you've mentioned, what's trading over there at TradeStation Land, where should they begin their journey, sir?
Yeah, so they're going to want to go to tradestation.com/options insider. We offer education for all levels. We have powerful platforms. As you mentioned, we have the blog. And for your listeners, we have cash rewards if they go to tradestation.com/options insider. Thank you.
There you go. TradeStation.com/options insider. No matter what it is you want to do in TradeStation Land, start your journey there so they know you came from us. And then you can click around, kick the tires, and light the fires, as they like to say, with the hot list and the Insights blog, which has some cool stuff. I recommend you check it out over there, particularly on the options front, and a lot of other cool things as well. And on behalf of Andrew 2.0 and the greasiest of meatballs, and indeed Uncle Mike, and of course myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such awesome questions like the theoretical decay of levered ETPs. We love it. Keep them coming. We'll keep the content coming. If you're listening live, we'll be back in exactly half an hour, a little bit less, about 27 minutes, to break down what the hell's going on the futures option side of the fence. Got some folks from RJO and others joining us there as well to get some insight into what they're seeing on their platform, what those folks are trading out there. Very curious. So check that out. In the meantime, we'll put maybe some boot camp or some fun stuff in there for you guys to enjoy. If you're listening after the fact, just hit next, and we'll have more content there for you, I promise. And we'll see you back here tomorrow, 1 p.m. Central, for Volatility Views, and then, of course, back again on Monday for more of the Option Block.
The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/options insider. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available on the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.